Hello, I'm Charisma Sutherland, your 2024 president, and I'm excited to share some news about two new products that Canopy has to offer. We already launched Forewarn, an application that gives agents the ability to verify identity, search for criminal histories, and validate information provided by potential clients. Down Payment Resource, or DPR, is the second product that we're excited to launch. Leading up to the launch, we are offering this series of webinars to prepare you to be able to use the down payment resource information to assist your buyers and also to educate listing agents and sellers about the important role down payment assistance plays in the markets we serve, where affordability is harder and harder to find. Why is this important? We know that millions of dollars in assistance is underutilized every year, meaning the renters may not even know that they qualify for home ownership through the thousands of applicable programs. We look forward to integrating this information so it's available at your fingertips.
Today, with a little snark, we want to talk about those darn DPAs and some of the objections and misperceptions that we commonly hear about these programs, about trying to transact using these programs, and bring to bear solutions and recommendations and best practices that we have heard or that we have curated from your peers around the country. So these are not our ideas about how to overcome objections and so forth. These are ideas from your fellow real estate agents and loan officers around the country. And we are bringing the perspective of loan officers to you because those are your critical partners in executing on down payment assistance. So that's the topic today. Again, my name is Sean Moss with Down Payment Resource. We've been working very closely with your Canopy MLS staff to bring the down payment resource integration to you in Matrix, along with other tools that you will all have for free as part of our partnership with Canopy. We also have Melinda and Tracy in the background from our down payment resource team. They're going to be answering questions as we go, so please use the Zoom Q&A. Now, with that, today's agenda includes a brief overview of the state of down payment assistance. If you were with us yesterday, then you'll hear some of this stuff kind of as a review. But if you weren't with us yesterday, then we'll talk briefly about what's going on with these programs. But the crux of the event today is observing and acknowledging perceptions and misperceptions about down payment assistance programs. And we're going to address the top 5 obstacles or objections that we hear from your peers, from the industry. And we're going to, for each of those, offer solutions, again, as we have curated and collected from your peers. Along the way, we'll talk about tools that can help you, and then we'll round it out with next steps and best practices. So, brief recap about Down Payment Resource and what we do today, or what we do. We are a national database and a matching engine of all of the more than 2,200 homebuyer assistance programs around the country. We integrate into MLS and property listing data, which is precisely what we're setting up with Canopy MLS now to be launched full bore by the end of January. That's the goal. And then we also will offer Down Payment Connect to all of you Canopy MLS members as part of this package for free, as well as other tools that we're going to cover really in the next 2 webinars. We're going to kind of do a deep dive into our actual tool set. But following along from yesterday, where we started learning about these programs in more detail, today we're going to learn about the objections and misperceptions about these programs. All of this is basically to say we are here to help you connect home buyers to the down payment help they need and to cut through some of the red tape and cut through some of the objections to get these deals done. And quite frankly, to identify prospective buyers who maybe are on the fence or on the cusp of being qualified. And some of these objections or misperceptions are holding them back. So, as far as what's out there, this is what we reviewed in more detail yesterday. But remember, we track not only down payment assistance programs, which come in a variety of forms that we discussed in detail yesterday, but we also track affordable first mortgages, mortgage credit certificates, which are not available in every state, but they are in yours. There is a mortgage credit certificate or tax credit available from the North Carolina Housing Finance Agency. But we also track all the other homebuyer assistance programs out there in an effort to ensure that you don't have to worry about tracking and monitoring which programs are available, which programs have money, how they work. We do all that for you, and we're going to make that available through Matrix and these other tools. But there are a lot of programs out there, and most of them are actually down payment or closing cost help. And again, there's no market in the country, as Will mentioned in yesterday's webinar, that isn't covered by at least your state housing finance agencies in North Carolina and South Carolina and every other state in the country. So every market, every part of every market has at least those state programs available, but there are many more programs across your market that come from North Carolina Housing Finance Agency, South Carolina Housing, various cities and counties, employers, housing-related nonprofits across your market, as well as other organizations like housing authorities, the Federal Home Loan Bank Network, community land trusts, and more. There are all kinds of providers of these programs, and many programs in your market. We'll look at those numbers in just a sec. But recall from yesterday as well, demand for these programs, especially among consumers and increasingly so among real estate agents, is through the roof. And that drives demand among lenders and loan officers to offer and originate and provide these programs as well. That's an important trend or topic we're going to hit on as we go. We have also seen down payment assistance providers, especially over the last 3 or 4 years, aggressively increase the assistance amounts they offer, the income and purchase price limits of their programs to keep the door open to more buyers in their market. We're also seeing more programs, just an increase in the number of programs available. And 82% of all these programs are funded and available today, which is about the norm going back many years. So all these programs are still available. Down payment assistance is not going away. And in fact, there is increasing attention on affordability and down payment assistance programs as a solution to affordability challenges. So we want to help bring that data and bring those programs to bear for you. Now, last part of the recap here, what's available in your market. As of right now, 43 programs, 36 of which are funded and available today from 32 different housing agencies. There are income limits up to 134,000 statewide, and this is North Carolina. There are more programs in South Carolina, by the way. Purchase price limits up to 726,000 or higher. Now we take the statewide limits from your state agencies here. There may be programs that are more flexible or more lenient on income and price, but the norm, the widely available programs are already quite flexible with income and purchase price. And then of all the programs available across your market, consumers can get anywhere from 1,000 to just over 50,000 in down payment help and an average of about 17,000. Now, perhaps most importantly, when we launch next week, you will see a down payment button on all eligible listings. That'll be on market residential for sale listings. And in a pre-launch analysis, we estimated about 72% of Canopy MLS listings will be eligible for down payment assistance and will have that down payment button on those listings. Next week's webinars are going to dive into that in more detail to show you how the platform works. But today, let's continue on with objections and misperceptions. I do also want to point out, we track a lot more information about these programs, and you'll see how to access that in some of the webinars next week. But to give you a glimpse into the flexibility, and also to give you a glimpse into some of the topics and in particular solutions we're going to talk about as we go here, we do a homeownership program index every quarter where we take a snapshot of what's out there across the country and we analyze trends among these programs. So I pulled a few for you for the last quarter of 2023, which we're about to publish that index for. 40% of these programs do not have a first-time homebuyer requirement. That means the door is open for buyers who currently or recently owned. And remember from yesterday, you're a first-time homebuyer if you have not owned a home in the last 3 years when it comes to down payment assistance. Additionally, from an inventory perspective, and this is going to come up in just a moment as our sort of obstacle or a top obstacle number one, 35% of these down payment assistance programs allow for the purchase of manufactured homes with their DPA. 30% of these programs allow for the purchase of multifamily or 2 to 4 unit residential properties with their programs. That's going to come up as we talk more about inventory. And then just so you know, I mentioned earlier, we've seen an increase in the number of programs. In fact, year over year, we saw a 6% increase in the number of homebuyer programs available across the country. And we'll leave this link in here for when the deck is distributed later, so you can access that homeownership program index. Now, let's get into the meat of today's event. Perceptions about down payment assistance. We're going to start with this, and then I'm going to introduce the top 5 obstacles, and we're going to break those down and offer solutions while we acknowledge those obstacles. But here are some things that we commonly hear from real estate agents, whether it's representing buyers or sellers, but also some things that we hear from loan officers. And again, we incorporated that for you today because they are your critical partners in executing on DPA transactions. So we want you to know what they're thinking, what they do, what their best practices and solutions are as well. So you can incorporate these into your relationships and your partnerships and your client transactions. So we hear a lot, now this is more from lenders, about how down payment assistance programs add cost and there's no margin. You might hear some lenders say, oh, those DPAs, they're not funded, or we don't like to do those. There are some reasons, maybe legitimate or not, why loan officers might not want to do these programs. Another might be they add complexity or risk. And we might hear from agents, well, these add complexity because now my buyer has to take a home buyer education class. Okay, fair enough. We hear that there are program training and adoption concerns. I'm aware of a program, but gosh, I really have to learn a lot in order to use that down payment assistance program. Well, as an agent, that's a best practice. You should. And we're going to talk about that. But rely on the loan officer. Loan officers who know these programs and do them well, they're going to overcome concerns like this. We hear a lot from both agents and loan officers about concerns regarding the impact on approval timeline or closing timeline, as in these programs will delay the transaction. We're going to directly address that. We hear that sellers won't accept offers that include down payment assistance. And quite frankly, for a while, sellers didn't even want to accept offers that hinted at FHA financing. So we're going to directly address that. We also hear concerns about the availability or the continuity of funding for these programs. Well, we track and monitor the funds that are available, so you know when you start talking to a client about a particular DPA, if that DPA has money. So overall, we hear a lot about people in the industry love the concept or the idea of down payment assistance, but they struggle with the logistics or the economics of these programs. So those are some of the things that we hear. And you guys are in the field. You hear things from, listing agents and so forth, representing sellers. You have your own perceptions and you hear perceptions from your own peers and the people you're working with. These are some of the more common things that we hear, but we want to rethink a lot of that. And that's what we're about to do here for the next 20 minutes or so. We want to rethink down payment assistance perceptions, and we're going to give you millions, literally millions of reasons to rethink all of that. But before we do that, let's jump into the top 5 obstacles that we're going to cover today, for which we have brought solutions for discussion or for your consideration. So, number 1, we're going to talk about how inventory is limited and unaffordable. Now, again, as we go through these top 5 obstacles, we're going to acknowledge and illustrate the issue, the problem, the obstacle, and then we're going to break each one down and offer solutions. So each of these 5, we're going to have a 2-step approach. Let's acknowledge the obstacle, realistic as it may be, or perceived as it may be, and then let's offer solutions to that obstacle curated from your peers around the country. So number 1, inventory is limited and unaffordable. There's certainly legitimacy to that. That is not a perceived obstacle. However, there are plenty of solutions that we can bring to bear to help buyers open the door to more inventory. Number 2, we're going to break this down. There's confusion out there among aspiring home buyers, especially first-time home buyers, about just down payment requirements. How much do you have to have in order to purchase a home, right? So we'll address that and bring solutions to bear again. Number 3, we're going to talk about how sellers refuse contracts that indicate the presence of a down payment assistance program and what we and our loan officer partners can do about that. Number 4, One of the biggest concerns is that down payment assistance will extend or delay or prolong the transaction, the closing. So we're going to address that. We're going to acknowledge what's perceived and what's real about that and bring some solutions to you. And then lastly, we're going to talk about establishing agent loan officer partnerships that are fruitful, productive, and professional, and why that might not be happening in some cases. So those are the 5 obstacles we're about to address, solutions coming with each one of them. So let's get started. Number 1, inventory is limited and unaffordable. First, what is the problem here? We do have historically low inventory in most, or at least many markets across the country. Now, maybe very recently that has started to trend in the other direction, but not in a notable, meaningful way. We still got a long way to go. Days on market is down. What's available goes fast. There's enormous demand for especially affordable properties, but very limited supply. So that, among other things, keeps prices either steady or in most markets increasing. And by the way, as rates go up, or for the last couple of years have gone up, again, those maybe are abating recently, very recently, but we'll see, right? We'll see what the long-term trends play out to look like. All of this means buyers are struggling to compete just on the inventory issue, not to mention other ways or other obstacles that especially first-time home buyers face. So what can we do? What can we do to address limited and unaffordable inventory concerns? Well, a few things. And remember, as we bring these solutions to you, we didn't make these up. We gathered these from real estate agents and loan officers all over the country over the last 2 years. And we've been bringing this series to our partners to make sure that everyone's aware of what your peers are doing, what they're thinking, what best practices they are evolving around the country that are working for them. So, regarding limited or unaffordable inventory, consider alternative inventory sources. For example, agency owned or municipal owned or nonprofit owned properties. There are in many markets, local housing authorities or community development departments or initiatives or nonprofits that will purchase, rehabilitate, and bring back to market properties for sale, sometimes below cost or below market prices or rates. So those are worth tracking, getting to know where those agencies are and what their inventory looks like and what the pace or cadence of property acquisition, redevelopment, and resale looks like. There are community land trusts in many markets. It's worth knowing what kind of inventory they have and what kind of land acquisition opportunities they're executing on, because that will lead to properties coming to market soon. What about homes that need minor repairs? And we're not talking about a home with, a hole in the roof and no appliances and things like that, right? But the properties that don't get snatched up in the first week or 2 or 3 that they're on the market, what's the reason? And is there an opportunity to maybe couple down payment assistance and a 203K loan or a rehab first mortgage to maybe get one of those properties, repair it, and purchase it with the help of a down payment assistance program? And again, just trying to throw out alternatives, right? Paths to additional inventory. What about coming soon properties? Are you partnered with the agents that are listing affordable properties? Are you tracking their coming soon notifications and so forth? What about 2-unit, 3-unit, 4-unit properties? We mentioned earlier that a lot of these programs will allow for the purchase of multifamily residential properties with their down payment assistance program. Where those programs are available, that inventory is opened up as an alternative path to home ownership for buyers that are interested in and willing to pursue a multifamily home. And then, of course, you have manufactured or modular homes. There are, as we saw earlier again, many and increasingly more programs that will allow for the purchase of manufactured homes using their down payment assistance. That opens up yet another door to incrementally more inventory. Now, no one of these is the golden goose here, right? But each one of these and other solutions like this can offer incrementally more inventory options for your buyers to consider. Also, counsel buyers about what the process and the competition is going to look like. How are people winning bids? What are sellers looking for today? What are the trends in terms of what What's getting an offer accepted. They need to understand that. Your buyers need to understand that. Explore not just down payment assistance programs, but affordable first mortgages, mortgage credit certificates, and other financing solutions that can help increase maybe their buying capacity based on reducing mortgage insurance costs, reducing mortgage payment costs, and so forth because of these financing solutions. And then, of course, this came from an agent in Houston, but calculated patience. Buyers need to narrow down their list of must-haves so they're fully prepared to strike on the right property when it hits the market. And that might mean sacrificing on the things that are nice to have, but that are going to get them into a home that they can make their own over time. So again, just some ideas, right? We certainly can't communicate every last idea we have, but we're trying to give you the best from among what your peers are doing. Now, as far as number 2, confusion about down payment requirements. Moving on to our second major obstacle here. The problem is real in part. When we worked with the Urban Institute on a report called Barriers to Accessing Credit. It's been a few years, but we still see these same numbers and trends play out in news story after news story in real estate and mortgage news outlets that essentially confirm that this is still an issue. But in 2018, one of the things the Urban Institute did as part of this report called Barriers to Accessing Credit was to survey, it was millennial renters at the time, prospective homebuyers who were millennial aged or lower and renters. And when asked how much they thought they had to have as a down payment to purchase a home, 65% of them thought that they needed 15% or 20% or more as a down payment. We all know that's not the case, right? But that's not the problem. The problem is the perception is reality among first-time homebuyers. So they think they have to have a bigger down payment than they do. When those same millennial renters were asked if they were familiar with low down payment programs, meaning FHA, 3.5% down, Fannie, Freddie, 3% down, 5% down, VA, USDA, if you're a qualified veteran or buying a qualified rural property, you can get a 0% down mortgage. But 76% of those millennial renters in that survey had little or no familiarity with those low down payment mortgage programs, not to mention down payment assistance that can help with these scenarios. So homebuyers, especially first-time homebuyers, are not familiar with industry terms and they're not familiar with guidelines, just the basic, down payment requirement guidelines, which means we have millions of homebuyers out there that are sidelining themselves because they simply don't understand the extent to which homeownership may actually be within reach. And then, of course, there's that magic number, the myth of 20% down. We all know that you don't have to have 20% down. We all know the advantages of having 20% down. But what we need to do is communicate to consumers that they don't have to have 20% down just to buy a home, to become a homeowner. So in terms of what we can do about this obstacle, of course, combat that 20% myth. And for a lot of us, get outside of our bubble. Educate ourselves as agents about the down payment help that's available to our clients. Get to know the basics of 1 or 2, 3 or 3 programs in our market. Expose those programs to our clients through our marketing. Tell stories about down payment assistance clients we've had in the past and what we were able to do with them. We're going to see some really cool examples of how to do this in the Down Payment Connect webinar next week. Provide down payment assistance education to your clients. Now, in order to access these programs, most of them require that the buyer complete a homebuyer education class, but that's separate here. What we're saying is provide that education about the fact that these programs even exist in your marketing and open up dialogue with more buyers to let them know that, hey, there may well be solutions in place. Homeownership may be closer than you think. Here are some ways that that might be the case. But then, of course, to balance the get outside your bubble idea, we've had other agents say, you know what, stay in your lane. If this isn't for you, if you don't want to get outside your bubble and deal with these programs, maybe consult with your broker, consult with your agent peers, consult with your loan officer partners, leverage them, refer to them that business if you're not comfortable getting into it. But you have a lot of tools and resources at your disposal. Certainly down payment resource, which is going to be fully integrated into Canopy MLS in January. You also have your local and state down payment assistance providers. They may have marketing content, educational opportunities for you, training opportunities for you, networking opportunities, even teaching opportunities. We work with agents all over the country that will partner up with the DPA providers themselves and teach a class about their program, which ends up being a great networking opportunity as well. And then, of course, there's the homebuyer education class. We'll talk more about how you might be able to leverage those classes by attending with one of your clients. So those are a few ways to combat confusion about down payment requirements, but it hinges on our marketing content, including and addressing the fact that you don't need 20% down and that there are programs out there to help. And you're going to have some really cool tools to help you do this once we launch, which again, we'll cover in next week's webinars. So, number 3, sellers refuse contracts with down payment assistance. I'm sure if any of you have worked with a DPA program or a buyer in the last year that used the DPA program, you probably had to deal with this to some extent, right? A little apprehension or just outright objection on the part of sellers. The problem is sellers and their agents often misunderstand DPAs. And I should pause here and say, we're not here to wag the finger. We're not here to lay blame. We're just here to acknowledge what we see in the market and to bring best practices from your peers. So that said, often we will see or hear from buyer's agents that the seller or the agent representing the seller misunderstands the DPA or what DPA is or does and can do for a buyer. We also see that if an agent has one bad past experience, that's going to sour their attitude about DPA for a long time. That bad past experience could have been due to a lot of things, and we'll talk about those in a moment, but it festers, right? So we want to make sure that we're working with partners and we're executing in transactions in a way that creates a smooth experience for everybody, the client included, right? Because they're not going to refer business if it's a clunky, messy transaction. But we also see that contract offers don't frame down payment assistance appropriately as a value add, meaning, and we'll get into that actually in a moment. We also see that sellers erroneously fear delays. They think that simply because there is a down payment assistance program, it inherently means that the transaction will take longer. And the agent's going to be in the ear of the seller saying, well, maybe we should rethink this offer because that's just going to take longer. And lastly, perhaps kind of wrapping all these together, we hear that sellers and the agents that represent them, they want certainty, which we all know, but they associate DPA or down payment assistance with a lack of certainty. So these are legitimate problems, right? Perception is reality for everybody, not just buyers who think they have to have 20% down, but agents who represent a seller and have had a bad past experience with the DPA transaction. So what can we do? What can we do to address apprehension among sellers about accepting a DPA offer? Well, agents and loan officers, I'm going to weave in loan officers here again, need to leverage their reputation as DPA experts. So agents, if you are an expert or you consider yourself a relative expert on one or a few of the DPA programs in your market, leverage that. Leverage that with your loan officer peers, but also the agents that you're transacting with. More on that in a moment. Leverage the value of a down payment assistance program. DPAs can help cover closing costs, not just add to the down payment. That means you can potentially make more competitive offers with your buyer by not asking the seller to cover closing costs. And so that's obviously higher net proceeds for the seller. You're not asking them to come out of pocket to cover your closing costs. You've got that covered another way, and it reduces one more objection that the seller might have. Down payment assistance can also open the door to conventional financing. So I want to talk through that for a moment. Consider that you've got a buyer who maybe has 2 or 3% of their own money to put towards the down payment, and they've got most of what they need for closing costs. They're just trying to get to that FHA 3.5% down. Well, what if you found a down payment assistance program that offered 3% down. Well, then, and maybe there's a little left over for closing costs. Now you have a scenario where that buyer's got 5% down and their closing costs covered. You don't even have to do an FHA loan. So you've removed another objection for the seller. We're doing conventional financing and I don't need you to cover closing costs. These are all ways that you as the buyer's agent can leverage the value and the opportunities afforded by a down payment assistance program to change the nature of financing, but also to change the nature of the contract in a way that looks more favorable to sellers who may have some of these objections. And then I'll round this out with provide assurance that the deal will get done. Understand the DPA requirements, and that falls largely on the loan officer, but agents, you've got an obligation to make sure that you understand whether or not the buyer has to take a home buyer education class, and whatever unique obligations might come with that DPA. But getting that class done is one way to prevent avoidable delays. Often we'll hear, oh, the delay was because of the DPA. Well, what if that buyer was looking for a property for 3 months and the loan officer had to update bank statements because they expired, and we don't have as much as we did before. We're short on cash to close. And then they had to use a down payment assistance program to get that transaction done. Let me ask the question. In that scenario, was the delay caused by the down payment assistance, or was the closing only possible because of the down payment assistance program at that point? So we got to be fair about what's a delay versus what's a savior, as it were. And then, of course, commit to appropriate timelines and communication. Back to the first bullet point up here, loan officers should also leverage their reputation as DPA experts. One of the ways that we have seen that done, and we have heard loan officers all over the country increasingly commit to doing this, is for the LO to get on the phone and call the seller and the seller's agent and tell them, look, I do these DPA transactions all day long. I do 7 of them a month. I've been doing this program for 10 years. I know the program. I know the program provider. I've got a great relationship with them. You signed a contract with 40 days to close. We're closing in 28 or whatever the case might be, right? But the LO should get on the phone and communicate their expertise and provide that certainty that the deal will get done because they know what they're doing. Lastly, don't disclose more than you have to about financing, and clarify that a qualified buyer, a buyer who is approved by a lender, is approved whether it's with a DPA or a 20% down conventional. They're all still qualified buyers. They went through underwriting and they were qualified. So hopefully that helps cut through the red tape as far as sellers' objections or even just apprehension about working with DPA buyers and accepting offers, contract offers from buyers using down payment assistance. Now, moving on to number 4. Down payment assistance extends the transaction or prolongs it or will delay our closing. The problem is anything can cause a delay, not just the down payment assistance program. Perhaps cash to close was not fully investigated up front. Now, that would largely be on the loan officer, right? But again, we all have an obligation to investigate this stuff thoroughly and make sure that everything is in place. So perhaps it's because the down payment assistance application was started later in the process. I just gave an example of that. A buyer got approved, and so they start going out to look for a home, but it's taking a while. They're not finding a home they can afford. They're not winning their bids. And at some point, they have to renew their bank statements with the loan officer. Well, if there's less money in the account when they do that, maybe that's when the DPA comes up. Now, that said, sometimes we know up front that there's going to be a down payment assistance program, right? But that application needs to run concurrent with the first mortgage application. There can't be a delay in starting the down payment assistance application. And again, that's largely on the loan officer, but we all need to be in communication and making sure these milestones are met. One common cause of delay is that the homebuyer education class was not completed. If you know that a buyer is likely to pursue down payment assistance, go ahead and have them take the class. they get a certificate of completion that's good for a year in most cases. So there's no reason to wait. But if you start an application for a mortgage, you know they're using down payment assistance and you know they have to take that class, get it done ASAP. There's no reason to wait. There's no reason that just that class should be a cause for delay. And by the way, there are increasingly more online options for homebuyer education classes. So there really is no reason to delay. They can do it at their own leisure, at their own schedule, your buyer, that is, and get that class done sooner rather than later. And then lastly, part of the problem here is miscommunication or lack of communication among the parties involved. And I will say that largely hinges on the loan officer. They need to understand who's involved, which program is involved, what the procedure is for that program, and that everyone is on the same page, including the buyer, about what their obligations are and what their timelines are. So those are some of the things that may cause the delay. So what can we do about that? When it comes to the down payment assistance program, know the program. What are the timelines for application submission to get the funds locked and reserved, to get the homebuyer education class done, to get final approval? How long until you can close? When can you sign a contract on a property? All of these things the loan officer will be aware of. But the more you're aware of this, and our platform will give you these details once we go live later in January, it's good for everybody to know the basics at least and leverage that loan officer to make sure that they're setting proper expectations. And again, do that homebuyer education class early. I already mentioned the certificates of completion are good for a year in most cases. So there's no reason to wait until you apply for a mortgage. Go ahead and do the class if you think or know that you will need down payment assistance, and make sure that that piece is done. And then other things can cause delays as well, right? Appraisal, inspection, insurance issues, and so forth, title. So ensure timely order of all of those. And agents, we're weaving in loan officer perspectives and objectives objections and best practices here, because as you will see when we cover the next obstacle, it is so important for agents to work with loan officers who know DPAs well and close on time. And that is a segue to number 5, the last major obstacle we're going to cover today: establishing agent loan officer partnerships. Now, what's the problem here? We're going to look at this from 2 different perspectives. We're going to look at this through the agent lens, and then we're going to look at this a little more specifically through the loan officer lens, because the 2 are critical and they go together. Part of the problem is, and we hear this all the time, agents have a very hard time finding, partnering with, and getting to know loan officers that meet 3 criteria. They offer down payment assistance programs to begin with. They want that business from agents, and they are good at those DPA programs and transactions. 3 different criteria, right? We also know that many loan officers do not, I would say, aggressively or sufficiently promote their DPA expertise when they have it. They don't highlight their DPA program offerings when they're approaching agents or marketing to consumers, and they're not active in their communities in ways that allow them to connect with agents that need their support. So in order to produce more fruitful, productive agent LO partnerships, what can agents do? Talk to your current loan officer partners. Ask the loan officers you already work with which DPA programs they participate in or they offer. Perhaps the topic just never came up, right? Maybe for a couple of your LOs, you've just never had a first-time homebuyer using a DPA. So you didn't think to ask that question, and therefore they didn't think to say, oh, well, hey, by the way, I've got these DPAs. So start there. Talk to your current LO partners. Also, ask your broker, do they know agents, or do they have lenders in mind that through their network they know are good at DPA, they want that business, and they close on time. Educate yourself about a few of the DPAs in your market. Attend a homebuyer education class. Your client would love it if you did that with them, but you'll also learn about the content that's produced in those classes and how you can incorporate the program information as well as the educational content into your marketing. And seek out new loan officer partnerships. You can do that through the DPA providers, through our down payment resource platform, through your peers, but seek out new loan officers that you know or can confirm offer these programs. And to the extent that you're building up your own DPA IQ, test their knowledge. See if they're up to date and savvy about a couple of programs that you think are great for your buyers. Also, court loan officers that teach homebuyer education classes. So the loan officers that teach those classes are highly likely to be very or relatively expert at down payment assistance, and it's how they got to the point that they were teaching those classes. So it's another good reason to attend one or to take advantage of any training opportunities with the DPA providers in your market, because you're also going to likely meet loan officers who are super good at those programs and are passionate about working with those buyers and with you, the agents representing them. And then talk to the DPA providers about who their top producers are. Most of your state agencies around the country, state housing finance agencies, they produce a list of top producers, not just which lenders offer their program or are approved to offer their program, but the ones that produce the most volume. Those loan officers are great candidates for you to approach to say, hey, I've got increasingly more clients that might benefit from or would need down payment assistance, but are otherwise ready to go. And I'd like to partner with you because I see that you do a lot of volume, which means you must close on time. Your reputation is good. Let's go out to lunch. Let's talk strategy and let's start to work together. And I hinted at this last one earlier, but court agents that list down payment assistance properties or that list affordable inventory, get on their mailing list, get on their coming soon list, stay in contact with them and build relationships with them, because they're more likely to be familiar with down payment assistance for the buyers they represent, but also the buyers that come by their affordable inventory. So hopefully that helps you from an agent perspective, but I do want to talk about what loan officers can do. These are the things we communicate to loan officers to make sure they are meeting you with your needs. They're meeting your needs. They're assisting you with these transactions and bringing best practices to bear that help you get your job done. So what we tell loan officers and what you should look for in loan officers are those that are becoming DPA subject matter experts, those that train on DPA programs, those that incorporate DPA programs into their marketing content, those that work proactively with their product development staff. Look, lenders have to go through a product development exercise to onboard any product, whether it's a regular mortgage or a down payment assistance program. But loan officers who understand that process and work closely with their product development team, they're the ones bringing on products like this, like down payment assistance, that are going to help them help you. So look for those LOs that are broadcasting the availability of these programs and bringing to bear these programs for you and for your clients. Lastly, partner up with education opportunities. So, get with loan officers and co-train. Do teaching seminars for these DPA providers, whether it's with the state or local agencies, or go to the events they host that are often taught by LOs. Those are the LOs that you want. Those are the LOs that are out there looking for you. But we're trying to point you to where these LOs are so that you guys can meet. And then a few things we also tell loan officers, just so you're aware of: get active in the community. We tell them, just like you guys are doing, right? Loan officers, especially now, they're not getting buku refi business, right? Get out there and talk to the unions, the employers, the churches, the faith-based organizations, and so forth. And get out there where realtors are also hitting the street, boots on the ground, promoting opportunities for homeownership. We're also telling loan officers, to the extent that they can, because some of them, especially with bigger companies or banks, they may have marketing restrictions, but leverage social media, and where they are, monitor their messages. Find those LOs whose social media presence and message meets yours or meets your needs, or broadcasts the availability of the programs and the expertise in these programs that you are looking for. And lastly, we tell loan officers, you've got to get out to meet agents and talk to them about a first-time homebuyer strategy. So for you, agents, look for those LOs that are out there trying to connect with you, letting you know that they offer these programs, and who have good, sound, new first-time homebuyer intake strategies that include reviewing cash to close, reviewing ratios, reviewing, AUS automated underwriting decisions to make sure that they've got products and solutions in place to combat those obstacles. Now, recapping all of these real quick, and then we'll round this out and get into Q&A. I see we've been super busy in Q&A as well. Keep it coming. All right, so to round this out, explore creative inventory alternatives. We gave you a number of them. And there are a lot of DPA programs that will allow for the purchase of more than just, your typical single family detached home. Number 2, clarify in your marketing for consumers, they don't have to have 20% down. It's surprising how many consumers still believe in or are subjected to that myth. Number 3, leverage the value of a DPA. Can it open up new doors to better financing scenarios? Can you help cover closing costs? We didn't even cover this, but can you use a DPA to buy down the interest rate or to offset mortgage insurance costs? There are a number of ways to leverage the value of a DPA, many of which can help improve the perceived quality of a contract offer, or at least overcome apprehensions among sellers based on their misperceptions about certainty and quality, as we discussed. Number 4, set buyer expectations and prepare early. Get that home buyer education class done, right? Don't let that be a delay. And then number 5, which we just finished, create innovative agent loan officer partnerships. Find those LOs who offer these programs, want your business, and are good at DPA. So I mentioned I'd give you millions of reasons to rethink down payment assistance. Well, here you go. We have found through our own analyses that 33% of declined mortgage loans are salvageable with a down payment assistance program. Now, down payment assistance can't help with a property issue, can't help with a credit issue, can't help with employment history issues, but it can help with cash to close and with ratios, qualifying ratios. So we've analyzed almost 4 billion in declined loans and found that 33% of those declined loans were declined for cash to close or ratio issues and were also eligible for down payment assistance programs, meaning credit was good. The income was there or close to there if ratios were tight, but with the application of a down payment assistance program, they could have seen, to the next bullet point, an average of 6% reduction in loan to value, which can lower the ratios as well. That's a huge impact. And those are people that probably connected with an agent. They went to a loan officer, they tried to get pre-qualified, didn't, but could have, and that could have been salvaged and could have been a transaction for you. So keep that in mind. And then we've done some analyses with RealtyTrack and other partners and found that about 68 million homes qualify for down payment assistance or other programs. And as we already know, about 72% of Canopy MLS inventory is eligible for these programs. So there are tons of properties priced at price points that are eligible for these programs, in part because these programs have such flexible purchase price limits. And we also know through other analyses that about 32 million renters are mortgage ready. That means income qualified, credit ready, but many don't think they qualify. And why is that? Is it because they think they have to have 20% down? They have a student loan and they think that's going to kill the deal. They're beholden to what they hear in the news, but they've not gone and spoken to a loan officer or a savvy real estate agent to figure out if home ownership is within reach. So millions of reasons to rethink down payment assistance. And I want to remind you, as we mentioned yesterday, these DPA customers become customers for life. You're going to see some really cool marketing examples of how to talk about down payment assistance and how to use this new tool, Down Payment Connect, that you're all about to have access to in next week's Down Payment Connect webinar. And as one more way of connecting with your peers and learning from them and networking, educating yourself, or for those who are savvy, weighing in and educating others, we encourage you to join the Down Payment Insiders group on Facebook with about 12,000 agents, LOs, DPA providers, homeownership counselors, and others across the country, sharing their ideas, sharing objections, apprehensions, solutions, best practices, and much more of what we've discussed today. And with that, Mel, Tracy, I'm gonna go to you here and see if there are any trends that we need to address from Q&A while we leave our contact information on the screen.
Yeah, hey, Sean. We've had some really good questions. I feel like most of them were answered in your presentation, but I did want to address one thing. I did have someone mention that they have just gotten flat out no's from loan officers when it comes to doing down payment assistance programs. Just we don't do them because, they're a waste of our time or whatever the excuse may be. But then I also received an interesting comment in Q&A. Gail states that when the market is slower, LOs become more aggressive in letting you know they offer DPA programs. She recently listed a house in a lower price point, and at least 4 LOs contacted her to inform about DPA programs. So I just wanted to highlight that because I think it's important, and you spoke to this too, Sean, but there are lenders out there that do these programs. We include links to participating lenders for each program in our search results, but you can also check with your state HFA and, check out their approved lender list. But, just wanted to point that out again, because I think it's important to know that you may have heard a no, but there are certainly lenders out there that do down payment programs and want your business.
Yeah, and just to chime in on that, so whoever made that comment or posted that question, you guys, you're going to hear this now and then. There are loan officers and lenders that they don't want to touch these programs. So let's just be candid. Not every lender offers DPA. And for lenders, the institutions that do, not every loan officer offers DPA. That said, your state housing finance agencies have lists of lenders and often top producers that offer these programs. Go there. Ask your broker. See if they have lenders in their network that they know offer these programs. Ask your peers. If you're getting no from a loan officer, and look, I want to be clear too. That might well be a loan officer that is a perfect partner for you for a 20% down buyer, or for someone buying repeated investment properties or whatever, right? But if they're not the loan officer for you when it comes to down payment assistance, there are plenty of other ways for you to find those LOs, not the least of which is use our platform when we launch next week, and we show you for every program available. When you click a down payment button in Canopy MLS, you'll be able to see the list of participating lenders as published by the program provider. But leverage the program providers. Go to North Carolina Housing Finance Agency's website, or better yet, call them and say, hey, I really need a loan officer in my market. Who does a lot of volume, who submits great applications, who closes on time. There's plenty of them out there. But sadly, to your point, we're going to hear from some that just don't want to offer them. And that's fine. They'll find business some other way, presumably, right? What else, Mel? Tracy?
Yeah, I mean, like I said, from my end, I don't really see any trends. We've had a lot of questions, which I think you might have mentioned this too. I mean, how to find a loan officer that does DPA is the number one question we get from agents. So we had a lot of questions about that. And then a couple of questions about homebuyer education courses. If you have something to add to that, Sean, please feel free. My instructions were just, agents, feel free to join them, look at opportunities to sponsor them, go to them with your buyers, and then, possibly even teach or co-teach them with loan officers. But I did also mention, and someone put a link in the Q&A to HUD's website. You do want to make sure that those courses are HUD approved courses.
Yeah, for homebuyer education, this will be a lot clearer when we do the next webinar, where we're going to actually explore the integration and show you how down payment resource, the platform, works. That stuff starts next week. But we show you, just like we show you who the lenders are for every program, we also show you how to meet their homebuyer education requirement. So that'll be super easy next week. We'll cover that in the next webinar. I do want to acknowledge Tammy, and I think Felicia, that question already got answered. Felicia said she already, I guess she meant on this webinar, went and got North Carolina Housing Finance Agency's lender list. Tammy says she works with the #1 lender in her area for DPA programs, and also knows people who administer the programs. She has an annual housing fair in a community of predominant tenants, and also does 4 buyer workshops per year. Tammy, that's awesome. Tammy, you're the kind of peer that we're talking about when we say, if you can't find a loan officer to work with, leverage your peers. Guys, you've got peers on this webinar now, your own peers in market that are connected, well connected with lenders who are doing a bang up job with these DPA programs, and agents who are networking and getting creative in their community. So there's plenty of opportunity out there. Tracy, anything you wanted to cover?
No, I think that everything that Mel was talking about, finding LOs and the questions about attending the home buyer education classes, those are what we keep getting questions about. And I've been providing the link as well to that HUD agency where you can search and find the classes in your area for you and your clients and stuff like that. So those just keep being the top things I think are the themes today, are those ones.
Yeah, I'm loving this. Connie, this is all Connie, Tammy, rock stars here. So I guess we'll leave that open a little bit if you guys want to network. But Brian, I want to ask you, anything else you want to add? Any of the Q&A stuff you want to address?
No, you guys were very thorough. Thank you again for this. And everybody that was in yesterday's, remember, you will be getting an email today letting you know that the video from yesterday is available. For those that weren't here yesterday, you can go to our website, to our resource, and that will be posted there as well. And thank you all very much.
All right. Thank you, guys. We'll talk to you next week. If you need anything in the meantime,